顺风而来，我只为束缚而来。我看见空，置于台上的灯光，闪烁的彩虹，爱却无边无际，说只秀有空，缘只有辫子为白了线。你不在的心，一个他的境界，只不过纸上的无情灵会让新世界，爱总是都不在管理继续时间，就在频频动完没动手不再迟疑，不必不再哭泣，遇得到的季节，就外面别曾经万被昨晚让幻变，甚至坠入阴间，爱你也在其实里，用花头的一手去怀旧连绵的线，自从是就梦忘了秒，微不藏只是黑是了，是说好是直接定他的牛肉去向你洗脚，不要成为成我有问题会发誓让我因为微信而爱上和心中自消失和我，我的来我大失败，安全要多说来，所以说好自爱，要绝何在？我看见空，我痴情也多，风不逆见，我一个人失眠，要换只是我安在你在的心，一个他的境界，只不过纸上的无情灵会让新世界，爱的谁都不在管理继续时间，就在频频痛完没动手不再迟疑，在晚餐里一直在的
It should work now. Does it work? Okay, it work. Man, computers acting so weird. Okie dokie. I think it's working. Can you hear me now? Yes, yes. Okie dokie. I'm ready to go. Sorry about that. Easy. Okay. Okay. Thank you, Serge. How's it going? Good morning. Good morning, everyone. You sound weird. Now my mic and my speakers is not working. Okay. Man, what's going on? Okay. Thank you for coming. Okay, ready for business. $425. got all my levels on the chart. Okay, here we go. Yep, today I'm trading with Topstep X with my 50K account. I'm watching this level 420, 425. $389, $390. Okay. I'm waiting for the price to stabilize before I taking it long. Okay, should be better. Really to take long right now, but I got to be patient here. Got to be super patient here. Yeah, have to be super patient. Waiting. I like to go through this 25. Stay above the 25 before I can go long. But not right now. As this close above the 825. 30 now. Okay. Move so fast. Like I said, my stop is 10 points. Take profit 15. Yeah, like this. Do this. Like I said, my take profit is 15 points. Stop loss 10 points. Give me a push. Push, push. Let go. Give me a push. Come on, let go. Let go. Come on, one more push. Please, one more push. Here we go. One more push. Give me one more push. Come on, one more push. Let go. One push. Here we go. I think I get this. I got this. One push. Let go. One push. That's all I ask. One more push. Go! Now. Go, 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 go. Now. No, like this. Let go. Only one contract. My take profit is 15 points. This has to go now. I'm super patient here. Super patient. Come on, let go. Let go. Give me a push. Push, push. Super patient with this trade. Super patient with this trade. I don't like this. Yeah. Let go. Give me that push. Come on, I ask 15 points. Man, I'm super patient with this trade. I'm out. Damn it. I'm gonna leave it. It didn't give me that push. Don't believe it. Now it's start to push. Now it's pushing. I know, I have to focus here. Above the 9. Oh shit. Man, this is the push I was looking for right here. 450. Damn it. Ay, ay, ay. Yeah, this is the push I was looking for, asking for. And I got so nervous and I got out. Shouldn't be nervous. God damn it. Yeah, I was so nervous. I got okay. I'm gonna leave it. Yeah, that's a push. But I've caught that 15 points. Trading right. So disappointing. Man, hit it. That's fine. Stop saying that. Is there another chance? Calm down. You know what? Give me a second. I'll drink some coffee. Myself up. Oh, by the way, welcome, Serge. Welcome. I get your first time here, huh? Welcome. With this account, I'm at 51,682. Let's say 61,700. All I need is $1,300 more to go to pass this account. I wasn't patient. Wasn't patient with that trade. Would have caught that, but. I'm up 32 bucks. Not much, but I'm happy with that. No worry. Hey, PT, what's happening, my friend? I am. Try to be. Yeah, 8 o'clock. 8 a.m. Pacific Standard Time. Please come. What's up, PT? How's it going, man? Did you see the trade that I took earlier? Yeah, it went like more than 10 points. And my take profit was 15 points. I was waiting and came back almost to my entry. I got chicken out. So I stopped myself out. I manually stopped myself out with 32 bucks in profit. But that's okay. I'll take that. That's fine. I got Surge. I'm caught that move at Surge. You take profit yet or still on it? Update, please. Awesome. This is for you, my friend. Where am I sound? Now, this is for you, my friend. Good job, man. I didn't hear that. See, something wrong with my computer today. What is going on here? Let me check. I don't know. You should hear that. But I cannot hear from my mic. Okay, kind of weird. Okay, audio. Here we go. Can you hear this? You guys hear that? I should fix that. I don't know if you guys hear that. Do you hear this? Like that? This is weird, making people acting so weird. Okay. Good job, Serge. Okay. Yeah. Thoughts on FOMC? PT, take it slow, my friend. But we should trade as normal, right? As for me, I'll find my support and resistance level. I'll just trade. But when time comes for the announcement, I better sit on my hands, not to gamble into that announcement. So, but from now until then, I just trade the way with my support and resistance level, right? Yeah, I would trade the way I usually trade. But when the time comes for the announcements and all that, I should sit on my hands. Yeah. We don't want to lose our account, you know what I'm saying? Yeah, just take it slow. For me, I would take it slow. Yeah. I remind myself every day, this is for long term, right? It's not one day, 1 week, right? So this is we doing this for a long term, right? Yeah. So just I don't want to gamble anymore. Just take my time. You know, the $200 here, $300 here. Maybe I will get lucky. We get $600 here, or maybe we get more lucky. We get $1,000 here. That's all. That's what I want. Consistency, right? Yeah. I don't want to gamble anymore. I want to trade, not to gamble anymore. Yeah. And stay calm, meditating, breathe in, breathe out. Hey, Crystal, what's up, man? Yeah, you're right. It's low. But I would trade, not a problem. If the volume kind of low, we have to watch it. We have to pay more attention, right? But I would trade as I would until then, until the FOMC meeting. But, look at that, we missed a big move like this. Did you get back in, Serge? Or you sitting on your hands? So what's up, Crystal? How's it going? You placing any trade yet, or? Yeah, this is from Topstep, Topstep X. These are the volume. Oh, you are. Yeah, yeah. Hitting the VWAP. We are at VWAP right now. And speaking of Topstep X, with the tilt, 56% long, 44% short. Wow. Oh, I just go through that VWAP. Wow, it went up 50 points. Leave it. Okay, our resistance level is at 480. I'm watching for this. Okay. I'm watching this level right now. I kind of aggressive, but that's fine. Yeah, I kind of aggressive. Yeah. I was kind of super aggressive. Yeah. Yeah. I was kind of aggressive with this trade. Doesn't look like it. I don't like it. But I'm super patient. Yeah. Super patient with this trade. It has to break the 9 and the VWAB. And my take profit is at 15 points. Has to go now. Okay, the 9. The 9 holding it up. It has to go now. Now. The power of now. Yeah. Here we go. Give it to me, baby. Give it to me, baby. Give it to me, baby. Now. $15 take profit. Let go. Now. Give it to me. One more push. Oh, come on. Give me that push. Now. Now. Turn around. Turn around. Here we go. I think I got this. Man, come on. Oh, where that 50 EMAs is. Break that 50. Come on. Break that 50. Come on. Please. Come on. Push. Now. No. No. Jesus, I'm super close. Let go. I asked only 15 points. I got it. Come on. Okay. Come on. Give me that push. Come on. Give it to me already. Got it. Awesome. That's for me, my friend. Oh. Awesome. Alright, I can relax now. Why don't move the stop loss? Because when I'm in a trade, I promise myself not to touch it. I can move my take profit, but not the stop loss. I set myself $200 stop loss. That is $200 stop loss. See some weakness there? I can see that it can give me another push. That's why I stayed on that trade. But in the back of my mind, I will go, if it go couple more points away from my take profit, then I will take myself out and lock in the profit of $150 or something like that. But my mind working like crazy at that time. I go, okay, I'll give it some more room to move because I see that it's, I can squeeze a little bit more out of that trade. But in the back of my mind, I go, I'm get ready to stop myself out to lock in that profit. Yeah. Hey, what's up, Moo? Yeah, awesome trade, man. Love it. Again, this is for me. Here's the drop. Wow, here's that drop. Anyhow, you know what? I gotta, let me go get, I'll drink some coffee to pump me up, to take the trade. But I'm here. Wow, another 10 points. Well, another 15 points. But again, never look back. Profit is profit. I'll trade the support. I'll trade the resistance levels, right? And I you know what, to be honest with you guys, let me go back. Be honest with you guys, okay? Like today we trade at what? 17,453, right? But later on tonight, right? You saying what the price on the NQ right now? You know what my answer will be? I don't know. I don't remember. So basically, when I get into a trade live stream, I just focus on what kind of price that I'm looking at, and I draw my support and resistance level. But in the like later on, like 4 or 5 hours, what was the price on the NQ? I go, I don't know, 17,000 something. So what I'm trying to get at is, as a trader, right? We don't care what kind of price that is trading right now. All I care is to map out my support resistance. Can't speak today. Draw out the support and resistance level and trade from that. Other than that, I don't remember what kind of prices that I was looking at. So, yeah, it might sound weird, but that's how my brain works. Anyway, $329. Awesome. It was slow. $300 here, $200 here, maybe $1,000 here. They all add up. But I'm taking my time, you know? You're welcome, Josie. Welcome. Thank you so much for your questions or your comment. Welcome. It touched the trend line and popped back up again. 29, 46. Wow, pop 15 points from the trend line very quickly. Yeah. Man. They add up. 10 points here, 15 point there. Yeah, and I only trade with one contract. $51,978. 52,000. I need one more $1,000. 52,000 right now. And again, I'm trading with Topstep and Topstep X. As of right now, the tilt on Topstep, long at 47%, short at 53%. For your information. Yep. Yeah, I'm just taking my time right now. I don't see anything in terms of making the move. 25 between 25 and 42. 15, 20 points range right here. So I'm just sitting on my hands, right? So no rush. I still have what 4 more hours to go. So plenty of time for me to trade. So there's no rush for me. I have to glue myself on the chair for another 4 hours. So it's fine. Another 4 hours to entertain you guys. And perhaps, hopefully, we all can learn something from my trade, right? Believe it or not, every night I rewatch my live stream. So basically like what I'm saying. Cannot speak today. Basically, I'm back testing my strategy and see what I did wrong, what I did right, and I learned from that. So hopefully, you guys can benefit from that too, from all my trades, from my losses, my wins, and all that. Yeah, but I do that almost every night, right? Basically, almost like back testing my trades and all. But yeah, what I did wrong, what I did right. Anyway. But be careful today, guys. Be careful, very careful today, especially when the announcement of FOMC meeting. Like I said earlier with PT, that I would not make any trade during the news because my reasoning is that was that we want to do this, for long term, not one day, or like that, gambling like that. So I just maybe perhaps I'll take a step back and then wait until the price is stabilized at certain level. Then I'll trade it based on my support and resistance. Yeah. So that's my game plan for today. Yeah. I hope you guys do the same too, not to gamble into any kind of to a trade. Yeah. But watch your support, watch your resistance level, and based on that, then take the trade, not to gamble into a trade. Yeah. I hope you guys do that too. Okay, look at that drop. I'm watching. $707. Whoa, look at that. Our next stop is 390. Is that what I have here? Yeah. I did not take the trade. Look at that. It would be awesome to short it when it broke through the trend line that I have it here, which is what 27, 28. Whoa, we're looking at 30 points, 25 points. Man, let's see, my trend lines here works, man, and my support resistance level works. So I will trade based on my support and resistance. Yeah. That's fine. I don't want to short right now. Too scary for me. Anyway. I hope you guys doing okay today. Doing good today. So far. So far so good. Huh? See, even with this here, I wouldn't go long. I have to wait for the price to stabilize at this level, like at this level. Then I'll take the trades, but not right now. Yeah, I keep saying, but in this game, right, patience is the name of the game. And we don't need much. We don't need 30 points. We don't need 100 points and something like that. All we need is 10 points here, 15 points there. That's all we need, right? And then when the time comes, instead of doing one contract, I'll do 2 contracts or 3 contracts, right? So, but anyway, you do you. I'm wrong all the time. So hopefully that we're brave enough to cut this 400 now for 15 points. 15 points from the low. So far, I made 3 trades already. What time is it? 9:04. Been on for 1 hour, and I made 3 trades. Two or three? Two trades. 1, 2. Yeah. 2 trades. Find the trade less. Try to trade less. What you do? Just slowly going up. Our resistance level at 38. We are at 28. We'll see. And our support right now is at 25. And see if 25 hold, which is where the 9, the trend line's here too. So to break through the 35. Very tempting, but the 50 up here too. And 45 resistance level here. Tempting to go short from here, but tempting to go short. Yeah. Our next stop is down here at 412. I was right on this. See how this candles is. There's some weakness here. One is broke. 30, 20. Yeah, I would have caught 10 points here, huh? Yeah, that's what I'm trying to say here. Support and resistance. All we need is 10 points. 10, 15 points. Yeah, all we want to do is to catch 10 points or 15 points, right? That's all we need. We don't care if the market going up, market going down. Watch for my support and resistance level, and I'll take 10, 15 points. Can you guys hear me okay? Is it loud enough? I'm not a morning person, so just give me some time. I will increase my volume. Speaking. Our VWAP up here is at 68. 25 points from here. 25 points from here. I'm watching. Oh wow, look at that move. $42. Waiting. think I'm late for this trade. I was looking at this. I was looking for this candle to go retest in the 43, 44. I wanted to go back to retest it so that I can take the trade in terms of going long, but it took off without me, so that's fine. I'm not going to FOMO into this trade. Yeah, this candle look pretty good. Broke the resist level here at 42, and then broke that 50 EMA as well. So I was hoping that this candle right here to go back and retest at 50. I mean, retesting at the 50 EMA, then the support level. I mean, this becomes support. So testing this here before I take the trade, but it took off without me, so that's fine. Yeah. Hey, good morning, Nachi. Good morning. How's it going, my friend? I make a couple trades already. You make any trade yet? Oh, okay. Good luck to you today. I know, huh? Now I'm watching for the VWAP level, 65, 68, so not going to take any trade. We have to be patient here. Yeah, so far so good, Naji. So far so good, friend. Yeah, I like it to go back down here and retest this at 42, 43 before I can take the trade, but I wouldn't do anything in this area right here, in this price range right now. Yeah, I like it to go back and retest the support at 42 with the VWAP and then the 9.
Dark enchanted forest lies my path, full of sorrows I shall walk.
54, 50, 54,
Share my
55.
dreams with fading spirits of witchcraft, to find the one I once had loved.
Screaming short. If it break through the 50, if not, we'll go all the way to 70, 68, 70. from 55 to 70. That 15 point right there too. So
Those tormented souls don't know that it's already late. The crows are circling above, awaiting for their prey. And though I have a fear in heart, I shall not turn away. I stop before forgotten crypt, enshrouded with a mist. One drop of blood and I'll regain the one I used to kiss.
it hit the resistance level at 65 and came back down again. Went back down. Went to the 9, bounced back up.
Arise, my love, and start a flame with single magic spark. Together we will walk forever through the land of dark.
It touched the resistance level and came down. Wow. Yeah, pay attention, pay attention. Is any of you guys caught this? I'm going short. 15 points. Let me take a break. I'll be back. Whenever I want to take a break, it moves on me. I don't like that, but I'll take a break. I'll be back. Hope my mic works. Doesn't look like it works, but might check. That's weird. Cannot hear from my glasses. My glasses doesn't connect to the mic. Come on. Mic check. Mic check. Not my day. Thank you, Church. But for some reason, I cannot hear my mic through my glasses, my reading glasses. It's supposed to connect to my glasses. Cannot hear myself. That's why I go, what's wrong? But everything seems to work. I can see the. That's weird. Okay, but as long as you can hear, then I'm good. Yeah, but I cannot hear it from my glasses. Okay. And now my music cut off too from my glasses. I don't know. Check. Sorry about that. Let me see. There we go. Okay. I should hear myself now. Come on, connect. Okay, should work now. You know how technology is. You have to take out your glasses, fold it, open it again, so that it can connect to the computer. Okay, sorry about that. Now I can hear music. I can hear myself talking. So that's cool. Anyway, it's not going anywhere. People waiting for the FOMC meeting. So slow. Yeah, I got new music earlier. You guys heard that when we did start out. I love that song, the new music. I can play that songs for you guys. Like it? I'll play that song. Where my music? Let me play the songs. I like it a lot. It's really pumped me up. After listening to this song, I really want to make the trade. Yeah. Like no short. That's right. Yep. Okay, go back to trading. Like that song. Hope that song wake all of us up, especially me, still sleepy. Yeah, I think that song wake me up. Okay, let's focus here. $15. Wow. Kind of slow. Sitting on my hands. All right, move. You must be my biggest fan, Moo. Oh, no, not yet? Okay. Yeah, be patient. You know, right? Taking our time. You know, wait for a good A+ setup. I made 2 trades today. I don't know if you saw that. Once with $32 profit, one with $300 profit. So far so good. Yeah. So I'm just be patient, you know. If you don't have to take the trade, don't take the trade, right? So this is not yeah. Yeah. I'm not only a Vietnamese, but I'm just a little bit of Chinese too. You hear that Mandarin songs earlier? Yeah, that Mandarin, and I speak Mandarin and Cantonese. Yeah, not the way I wanted to, not 100%, but I can speak it, understand it. Yep. Yeah, my grandparents are from China. They immigrated to Vietnam. Yeah, but yeah, I went to Chinese school in Vietnam. But after the communists took over Vietnam, we had to go to Vietnamese school. So yeah, I went to Chinese school when I was in Vietnam. But yep, I speak Chinese here and there. Anyway, wow, look at this. Okay, now we at 25 and 37. Not much. 13 points. Is that 13 points? Yeah. Waiting. No, I do not. Watching. Here the 9 and here the 50. Right. Yeah, if you guys new to my channel, I trade with Apex and I trade with Topstep. Maybe I'll show you my Apex account. See if I can switch over, right? So I can explain. Okay, here my Apex account, right? Down there, they are my funded account with Apex. If you're new to me, to my account, my YouTube channel, I shelf all my funded account with Apex. Yeah, but yeah, those are my funded account with Apex, right? And I pass a whole bunch of Apex account, but I have not passed any of the Topstep account. So the reason I'm trading with Topstep now is because that I want to prove to myself that I can pass with Topstep too. So that's why I've been trading with Apex for the last I know, but Yeah, this is my Apex accounts down there. Gonna go back to Topstep. Okay, I've been trading with Topstep for a little bit, and I never could pass Topstep's account. Topstep, but, you know, I really want to get funded with Topstep, so what I'm trying to get funded with Topstep to prove it to myself that I can pass with Topstep too. So cross my finger, right, not to blow up any of the Topstep's account. So but so far so good. This has been for the last few days. I been doing okay with Topstep, so we'll stay this way. Yeah. Yep. Oh, you did move? Awesome. Awesome. Good job. Wow. Good job, man. All right. Congrats. Awesome. Yeah, a lot of people have questions on payout with Apex. I request payout before, and I have no problem at all. Yeah, they get paid just like that. It's just no problem. So if you worry about getting paid from Apex, you should not be worried. Right now, I don't know what happens in the futures, but I had no problem with Apex. So yeah, I wouldn't worry about that. I don't know about gambling. You know. Yeah. Yeah. Yeah, but I wish everybody good luck. Not to blow up, trying to be conservative, and trade with stop loss in place, especially today with FOMC and all that. So trying to protect our account at all costs, not to get carried away and blow up our accounts. So be careful, okay? Be very careful. Try not to blow up any out account. We working so hard for these. So trade with a stop loss in place, especially with the FOMC announcement when it's announced, you know, whatever it is, or whenever it is, or whenever it will be. Just maybe take a step back and say, okay, I'll take a step back for a couple of minutes, you know, and wait until the price is stabilized and we'll take the trade. But be careful. Yeah. I don't want you guys to lose any of the account, right? And we will want to protect our account at all costs. Hopefully we can survive to trade the next day and the next day. So and get a payout, request a payout from Apex or from Topsteps. So you know, yeah. Be patient, patient. But other than that, I'm doing okay today. Super disciplined. Been trading for, been on live. What I'm saying? Been streaming for the last 2 hours, and I made 2 trades. Yep. Yeah. So 2 trades. Hey Gino, what's up, my friend? I miss you, man. What's going on, sir? Mr. Gino. You missed my Chinese music I played earlier. Man, let's pump everybody up. Yeah. What's up, my friend? Good morning, my friend. Yeah, I'm sorry about that, man. Oh, you did? Yeah. Be patient, Chino. I know you know what you're doing already, but sometimes it's kind of hard, to control our emotions, to master our emotions. Tough, man. Yeah, I understand completely, man. But yeah, I don't know what to say. It's hard. But you know what? To be honest with you, that to all of you, that once I settle for a stop loss and take profit on every trade, that take one of the hurdle out of my equations. I don't know if I make myself clear, but yeah, I got my stop loss in place, my take profit in place on every trade. Then that give me a confidence of taking the trade. Right, I'm saying to and say to myself that worst come to worst, I'm risking 10 points, $200. That's it, right? And that give me a peace of mind that I'm okay. I'm willing to risk that much for this particular trade. That helped me a lot in terms of getting emotional involved to a trade. But if you guys been here long enough, you guys knows that I never ever, sometimes allowed it to go all the way to 10 points against me to stop me out. Yeah. When I get to a trade, I'm saying it again. If I'm saying this to a new comer to my channel. When I get into a trade, if it goes against me, I don't see it. You know, if you trade futures long enough, you can feel it, right? Like when you take a trade, basically you put yourself into the trade, like you in that vehicle. Like I'm getting onto a bus, basically. But I can feel that my bus is have some kind of issues, engine issues or mechanical issues. I go, okay, let me get ready to get off. So I basically manually stop myself out with 2 or 3 points. You get my point. Yeah. But that's what I'm doing. When I get into a trade, I assuming that I'm get onto a bus, right? If the bus like slowing down, say, okay, I have some kind of issue now, Jeff. I think I have some issues. Then I'm get ready to get off, even though I have a 10-point stop loss on that trade. So I just get off, and I may be wrong too, right? But I go, let me get off. Oh, you do what you do, right? And then I will get back on when you fix your engine problem, and that you get my point, right? So yeah. That's how I treat all my trade with that. Yeah, I know, man. I don't want to do that. No, honestly, I don't want to. But you know what? Somehow I'm not talking to you guys. Yeah, in a way I am, but I assure me that is the rule that I have to apply on myself, right? But I'm not saying that you have to do it like that, yeah. But I'm saying to myself saying that this is the way that I'm supposed to do. You know what I'm saying? So, yeah. No, but in no way that I'm trying to put my rules on you guys and all that, yeah. But in no way that I'm trying to criticize you guys, saying that this is the way it is. You know, there's no right way and wrong way to do it. Right? So I'm here to motivate you guys, right? Hopefully that we all can be successful, right? But maybe in a small way, you say, oh yeah, this guy make a little bit of sense here and a little bit there. If you can incorporate some of my idea to your trading, man, that's awesome. And when you think it works for you, then that's awesome, right? But honestly, bottom line is, I'm not here to criticize anyone. I'm just reaffirm to me that the way that I supposed to trade, that's the way I should trade. Yeah. Yeah. Never mind. Yeah. We're here to have fun, right? And hopefully we can, I'm here trying to provide as much as value as possible. Hopefully, I provide good value for you guys. Yeah, but I'm learning. I'm learning too. Yeah, I'm willing to listen and all that. So, yeah. Yes, yeah, yeah. Yeah, that you and I both know that there's no right way or wrong way to trade, right? We have our own ways to trade, right? To make money, right? But that's how I trade, right? If I do not have a YouTube channel, this is how I talk to myself too. Believe it or not, when I'm in front of the screen and trying to trade, I go, should I do this? Should I do that? Or this is that, right? So I'll do exactly the same thing. So hopefully you guys understand where I'm coming from. I'm talking to myself, not to you guys, but hopefully in a small way. Again, I'm repeating myself. In a small way, if it help you guys a little bit, then that's awesome. Yeah. Okay, let me shut up a little bit and focus on the trade. Focus on the chart. But you guys knows what? I hope I deserve a like from you guys. Like. Smash on that like. Give it to me. Smash on that like. One time. Don't do it twice because you take that off. Smash on that like. Yeah. I appreciate you for click on that like. Hopefully we all have fun. FOMCs and all that. Going to be super crazy, huh? FOMC meeting. Anyway. Yep. This is me. You guys hear that? That's me. don't know. Is at 1 o'clock? In a couple hours. You like? I like it too. I like this. I the sound of money. I like the sounds. I like this sound too. The sound of money. Yeah, I'm curious. What time is the FOMC? Yeah, it's 2 p.m. Eastern Time. 2 p.m. Eastern Time. Okay, 2 p.m. Just broke that trend line at 34, 6 point now. Wow. Yeah, I'm going to stream live of the Papa Pow when the time comes. We have got to hear what he has to say. Cut interest rate or lower interest rate? That will be the million-dollar questions. Will you cut? Will you hold? Or will you raise the interest rate? It doesn't want to go. 27 and 40. We're looking at less than 10 points in this range right here. 10, 15 points. I wouldn't touch it right now. I've got to be super patient. You see that? Up 5, 7 points, down 5, 7 points. Where this trend line is. No, you guys saw that. came up to 37, 38. You guys see what I'm saying? There's no way I'm going to take the trade, right? Either way, you lose money. It hit that 37, came back down, and went down to perhaps 30, popped back up again. So tight. Can't touch this. What is that song? Maybe I'll play that song. Can't touch this. Can't touch this. Can't touch this. I don't know. I can never ever be a singer. Can't touch this. I don't know. I should keep my day trading job. We go 26. See if 26 hold. I'll bet you it's going to hold and pop back up again to 35. And then from 35 go up to 40. And then come back down again. Is that what? Okay, it broke that 27. Look to the left. Look to the left. Not much going on. Yeah, I'm watching. No go for me. No go. Kind of quiet today, Hachino. Super quiet. The chat is very quiet too. Come on. Introduce yourself. Guys, don't be shy. Kind of quiet. Please introduce yourself. My name is so and so. Introduce yourself. So quiet. Kind of dangerous when it's quiet. I don't want to take a tray. You know, sometimes you get bored. you take the tray for the heck of taking the tray, and give back $300 or $200. Come on, chat. Introduce yourself. Say something. Is that not the song too? Say something like that. Well, anyway, I hate to talk to myself. No, I don't hate talking to myself. I love to talk. And Chino know that. Sometimes Chino goes, "You talk too much." No, he didn't say that. He's a nice person. He's a nice guy. Yeah, it's would be awesome if you guys hop on to the chat. Say, "Hey man, I make $1,000 today. I'm in the green today. I'm in the red. I'm waiting. I have not made any trade." Say something. I don't know. I forgot that sounds. Sometimes getting so bored. I want to sing for you guys. Yeah. But Here we go. 400, 7,400. I'm watching for this level, 7,400. Hear that pop again. Came back up. Hit the 9. Fourth row. Wow. $400. I'm waiting for the 400. Yep, 50 more minutes before the Fed meeting. Okay. Look at that pop very quickly. Wow. Stay focused. Wow, see that push. Wow, that push. Didn't see that coming. 21.42, 21 points. 21 points. Wow, that's a huge push. Our resistance level at 42. See if 42 hold. 442. Wow. You guys caught this move? I wasn't focused. 25 points. 25 points from this resistance level or support. Wow. Wow, very good. Decent volume too. Wow. Wow, very quickly, Chino. Seven. Yeah, it is a crystal. But look at this move here. Minimum of 25 points. But again, 25 point with NQ. But 1, 2, 3, 4 minutes. $35 more minutes to go before the Fed announcement. Let me check if Fed announcement on YouTube or yeah, I can stream it live. Wow. FOMC for FOMC. Let me see. Yeah, get it ready for you guys. Yahoo Finance. Okay, when the time comes, I'll do it live. Okay. So be ready, guys. Awesome, Chino. Rice with chicken, rocks. Yeah, yeah. Hey man, too bad that I don't eat meat anymore. I stopped eating meat for more than 10 years now. Yeah, but this is awesome. Chicken's good. Yeah. Awesome, Chino. That your lunch? Cơm gà. Okay. Sound delicious, my friend. You like pho, Chino? Awesome. Give me a second, I'll be back. Back. I am back, and my mic is cannot hear what I'm saying. Cannot hear what I'm saying. There's something going on. All right, see you, Chino. Thank you for checking in. Thank you for stopping by. I appreciate you. Wow, it's a huge move. 413, 52. I know that Gino will come back. I know he will come back before the day's end. Even though he said, I'm done, I'm gone, I'll see you tomorrow. But he'll be back. I really want to take this trade here, but really like to take this trade. Oh wait. But look at this here, the volume here. A lot more buyer than seller. Yeah, sometimes I have to look at this volume down here too. A lot more green than red. Yeah. See, I just saved myself 200 bucks for being patient. Yeah, it would have stopped me out for 10 points. Anyway. Well, just keep going. Anyway. 10 more minutes. 10, 15 minutes. So scary. Let me take a quick break before that OMC. Quick break. I'm back. It broke through the VWAP at 64, 65. Wow, 15 points. Watch it, watch it. Focus, focus. this on yet? No, not yet. Hmm. $25 points from here. Wow. Patient, patient, patient. The 9, the EMA, the 9 is at 50. I'm watching. I'm watching this level right now. We 14 more minutes to go before the Fed meets, before the FOMC. trying to go back up again. Here's the VWAP, 65. Scary time. See if the VWAP hold. I don't want to take the tray. Patient, patient, patient. Sitting on my hands. Again, I'm trading with Topstep X. As of right now, the tilt 60%, 65% long, 35% short. That from Topstep X tilt. Ten more minutes to go. 10 more minutes to go. Just gotta review. Patient, patient, okay. Wish everybody good luck. And please do not blow up your account today. Save it for tomorrow. Save it for mañana. Save it for tomorrow. Okay? Don't go crazy. We have 10 more minutes to go before the FOMC. So sit back, relax. Don't trade. Wait until the price to stabilize. Then we'll take the trade. I'm doing exactly the same thing for me too. Not to take the trade. I know sometimes it's kind of tempting, you know, to take the trade, either short or long, to catch that 100 points move. we should do this for long term, not trying to catch that move. That's fine. Trying to catch 10, 15 points. But wish everybody good luck. Yep. Wish you guys good luck. And again, don't try to go crazy now. Scary time. 9 more minutes to go. Yep. Focus, man. Oh, yeah. Pray now. We can pray now. But patient, okay? Patient. Strong yet? Not yet. Okay, I will stream it live. Slippy, slippy. Let me drink some more water. Get ready. Okay. $5.29. Yeah, maybe I just do the sound. Then no need for this. We need to see the chart. Let me see if we can do the sound instead. Yep, no, we don't need to see him. We want to see the chart so that we can trade. What happened? Just the sound is fine.
But first, the big story of the week, and that's the Fed's rate decision. While the timing of the Fed's first cut is front of mind for investors, could start.
More minutes to go. Yeah, I want to stream the sound, but I want to see the chart. Yeah, we don't want to see him.
Welcome to Yahoo Finance this Wednesday, May 1st. I'm Josh Lipton alongside Akiko Fujita. We are moments away from the Fed's decision on interest rates. Then I was going to do a quick check on the markets here. Akiko.
Can you guys hear it okay? Or you want to go higher? The sound's okay? From Yahoo Finance? Or should I go a little bit higher?
About 0.2%. Want to get a quick check on yields as well. Just your benchmark 10-year. The yield
It's not too loud.
Down about 3 basis points to 4.65. We did get some kind of weaker economic data this morning, Hugo, but of course the main event, the Fed's rate policy decision, is on tap.
And no real change expected this time around in terms of policy, but there's going to be a lot of focus, as always, on that press conference from Fed Chair Jay Powell, especially given the data that we've gotten recently. March CPI coming stronger than expected. We saw data on Tuesday pointing to wage growth acceleration. It feels like since that last Fed meeting that in many ways that expectation has been reset a bit, or the timeline pushed back for a potential cut.
You know, to your point, Diane Swank, the very smart economist over at KPMG, she was kind of echoing your point. I think the client, she was sort of saying, listen, for her it's about just kind of watching, does the debate, the Fed kind of shift the debate, the tone and tenor from when to cut to whether we cut at all. Just because, to a point you just made, since the last Fed's meeting, these inflation reports coming hotter than expected, kind of just reinforcing the Fed's mantra here for higher for longer.
Yeah, so much of this is about messaging coming through from the Fed, and you could argue, some would say, look, maybe Jay Powell messaged too clearly about that expectation of a Fed rate cut coming through in June. That has obviously been pushed back as well, but there's also going to be questions about whether, in fact, the Fed missed some of this data.
With officials noting that there has been a lack of progress on inflation dropping and that they will need to gain confidence before they can begin cutting rates. Officials also announcing that they will begin to slow their balance sheet runoff program. Officials adding a line in their statement that, quote, in recent months, there has been a lack of further progress towards the committee's 2% inflation objective, and retaining key language that, quote, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably back toward 2%. Now, separately, the Fed made changes to its program for shrinking its balance sheet. Beginning June 1st, it will cap the amount of treasuries it allows to roll off its balance sheet at $25 billion a month. That's down from $60 billion, but they will retain the level on mortgage-backed securities at $35 billion a month. They also said they will reinvest any principal payments in excess to this cap into Treasury securities. This decision was unanimous. Back to you.
All right, Jen, thank you so much. Markets are mixed after the Fed's latest interest rate decision there. Joining us now for more is Stephen Wheating, Citi Wealth Chief Investment Strategist and Chief Economist. Stephen, it is good to see you. So listen, no change.
Thank you.
Stephen, Fed holds steady, lack of progress on inflation they talk about. They need to gain confidence before cutting. Sounds like we got some signals there about QT as well. Stephen, let me just get your first take, your reaction.
Well, look, it's pretty clear that the first quarter CPI data, which bounced back from an exaggerated drop in the fourth quarter, doesn't give the Fed the confidence it needed that it's on the way sustainably to a 2% inflation rate. At the same time, if you were to take a look at the Fed's preferred measure inflation, it's clearly a less volatile construct. The latest readings we had for the month of March at 2.8%. If you look at it with precision, it's the lowest reading of this rebound cycle in the economy since the pandemic, and it's continued to show mild deceleration. So we think again that if the labor market shows more slowing than it has,
I don't know, right now it's kind of moving so fast, we just cannot predict, which direction the market goes. So as for me, I just sit on my hands, wait as long as possible. But
step down in the growth rate of labor demand. And we have more progress on inflation measures, which I think are coming. The Federal Reserve
trading above the VWAP right now.
Restrictive monetary policy to something a little more neutral, even later this year.
And we expect the Fed to speak in about, 20, 30 minutes.
How do you think the Fed chair needs to message this going in about 30 minutes or so to set the expectation?
I'll just wait and see if it's like, if I see a good A+ setup, I'll take the trade. But right now,
and expectations for Fed
I don't want
policy
to
rates are
do
highly
anything.
unstable. We went a year ago from 2 rate cuts, and that was a big change to begin with. The pricing in 7 cuts, the pricing in 1. If you look at the
because
Fed
it moves so
going forward
fast
fast,
with
for its
my
policy rate controls,
10-point stop loss.
it,
It would
on
take me out
average,
just
is
like
close
that.
to a
I mean,
full
within a
percentage
second.
point off what
So,
actually happens 1 year
and of course,
out.
it can go the other way
And
around
again,
too, but
the Fed
I
chairman's
don't want
done nothing
to
since July
risk it.
of last year on actual policy rates. They probably were a little bit too optimistic
Wow, look
of
at
the
that.
speed of the disinflation that we saw last year with some of the bounce back. But quite simply saying that staying the course is likely to result in a rebalancing in supply and demand, that we think that doing that could still, again, preserve the current economic expansion. After all of that backup that we had in policy rate expectations, it's probably not going to harm markets. Now, again, that's not his main goal here. But the Federal Reserve should know that they have made progress. It's slow progress. And this setting for monetary policy will continue to make progress.
Stephen, let's say I could put you in that presser with Jay Powell. What would be your number one question for him, Stephen? Actually, I don't mean to hold you one. Maybe you have a few. What would they be?
Well, one would be,
Give me a second.
can you tell us what you think the destination is for U.S. employment growth? And if you are achieving your goals, if you're getting closer to 2.5% CPI, 2% PCE out there, again, what kind of employment growth will you tolerate? And, I think, again, the Fed has told us in the past, again, that they have no problem with employment growth. In fact, they should maximize this if we are achieving our inflation goals. And to what extent, again, did the volatile movement in the consumer price index, if you take a look at the last 12 months, about a fifth of the entire rise.
Yeah, you guys see what I'm saying? Right? Drop
in the last 12 months.
from
Again,
480,
to go back,
40
to
points
what
from
the
here,
message is, from the data, the way they see
50
it,
points
again, in
from the
most
top to the bottom.
stable
10 point doesn't mean
readings
anything,
of
so
PCE inflation readings.
that's how much
And really
risk that I
clarifying, again, whether they're going to be
want to
focused
put on,
the
but
disappointments in
no,
the
it's
CPI
not
that
for
markets
me
have.
right now.
Stephen, so much has been made
Stick
about
with my
the
plan.
politicization of the Fed or
Wait.
the perception of politics. Given that it's an election year, don't expect the Fed chair to necessarily acknowledge what the politics are at play here. But as you look at the timeline and the election looming in November, how tight is that window, you think, for the Fed to act?
Well, I think the Fed will act much more apolitically than I think some assume. You can look back at Federal Reserve transcripts, and there's plenty of concern about, being in the eyes of politics. But given, the larger scope of issues that the country faces, that the world faces, again, a slight adjustment in monetary policy or the lack thereof is pretty small. And I think if you look back to 2018, at a time when Fed Chairman Powell was under great political pressure, probably the greatest political pressure going back to the early 1980s, the Fed acted apolitically, did not, again, respond in any way, in a personal way, did not care about their own personal, again, outcomes to do the right thing in terms of maintaining, again, the appropriate monetary policy. But they'll continue to act that way.
Stephen, just sticking with the politics theme, I'm just curious to get your take. I mean, you saw that Wall Street Journal, article,
Yes.
Stephen. I'm sure it made a lot of headlines suggesting that Trump allies were, I guess, drafting plans to really erode the Fed's independence. What did you make of that, Stephen, if anything?
Well, the first thing is that it would take an act of Congress to amend the Federal Reserve Act. It takes bipartisan act or something like that. So I think it seems fairly remote in terms of an actual change. And, I would look at it this way. We can argue, we can complain about the Fed, again, pivoting and being extreme, maybe over-steering in the United States. I've made certainly that complaint. But again, stabilizing inflation expectations, making sure that our problems were contained to the short run. The Federal Reserve has done a great public service in that. Even after the interest rate increases that we've absorbed, we have seen that, for example, Treasury debt interest payments relative to revenue, are well below 1990s levels, even after all of this. And again, there's probably still some more to come. But again, that can only be done.
I'm watching.
When
I
you
have not made any trade.
expectations of stability and responsible
Seen the
monetary policy.
FOMC announcement.
That's highly important, again, to the value of the dollar. Which
You guys
is
made any
very, very
trades?
potent, American strength. So again, the confidence that's there in the Fed is important. We would pay higher real interest rates in the United States if the world viewed, the U.S. is giving up on central bank independence.
Finally, Stephen, as we look to the market reaction, pretty muted right now. I mean, S&P 500 just below the flat line here. But what do you think is the one risk the market is maybe overlooking right now as it relates to Fed policy?
As it relates to Fed policy, certainly tail risks, of course. If there was some supply shock and the Federal Reserve stayed tight through that, these are the sorts of things. But by and large, monetary policy is the reaction to the economy. It really comes down to, for me, what are the conditions under which the Federal Reserve would ease monetary policy that would dial back from what looks like it's going to be a fairly restrictive, slightly restrictive monetary policy from here. So, I don't look at rate cuts and say, well, that's magic. Everything, works well under those circumstances. So, is it really that we can get the rest of this inflation down to a normal level and still persist in a strong growth rate? Again, I think we're going to see less labor market strength is probably the reason why we will have some easing of monetary policy at the end of the day. Now, that's not going to be a disaster for the economy or financial markets. I think if you think about just today, again, we've moved a lot. We've moved in a volatile range, very reactive to employment data and inflation data, exaggerating how much volatility there would be out of actual monetary policy. And so just the chairman's words, if he says these very same things that have already been mildly discussed, we could end up seeing the reaction on the press conference, which has generally been the way things have run in the last couple of years.
You're certainly right about that. We'll be looking for that in about 20 minutes or so. Stephen Whiting from Citi, as always, thanks so much for joining us today.
Thank you.
Well, markets are mixed ahead of Fed Chair Jerome Powell's news conference after the central bank left rates unchanged. But the central bank did say it's committed to getting inflation down to its 2% goal. Let's take a look at the action with Yahoo Finance's Jared Lickery standing by there. Jared.
Thank you, Akiko. And let's get the Wi-Fi Interactive behind me. We're going to take a look at the indices. Each of them looks pretty different in a chart. You can see the Dow has been staying in the green the entire day, and it's towards the highs of the day here. Here's the NASDAQ. It's down 5 basis points. Very small amount, just barely dipped into the green after the report. And here's the S&P 500, as you just said, Kiko, not really able to climb into the green just yet.
The
but
tilt,
I should say these are very
54% long, 46% short.
Here. We don't usually
Once
see
again, the tilt is 44% short, 50%, 56% long.
These are Treasury note futures. This is a 2-year tenor. We got a little bit of a spike up, meaning yields came down on the report, so that's a little bit of a reprieve in the bond market. Here's the 10-year, pretty similar chart. And now I'm going to go through some of the futures. Now, we know gold has been making records recently, though it's come off of those highs, and here it is, still in the green today, but not a big reaction off the report. Very rarely do we get reaction in WTI crude, and we're not really seeing one here. Finally, I want to hit Bitcoin, and let's take a look. We got a little bit of an uptick on Bitcoin, but might see something a little bit later. Again, when Powell finally takes a stand, and we got to check out
the VWAP is at 67. Right now we're trading at 80.
So this is just a little bit
so it's only 10 point, 15 point above the VWAP. So have to wait and see.
All right, Jared,
Here the 9.
For more on the Fed's
So
decision
we'll
to hold
see.
rates steady and the future path
There's no
for rate
rush
cuts,
for me
we have
here.
Ann Barry, Threadneedle Strategies
Like I said, if I
founder,
miss it, I miss it.
Jeff Klingelhofer, Thornburg
Kind of
Investment
difficult to
Management, Head
trade,
of Investments, joining us now to discuss. Welcome
FOMC.
to you both. Jeff, maybe I'll start with you. Just give me your first reaction, Jeff, to what you've heard so far.
Yeah, I think we saw the pivot to the pivot. And, I've said for quite some time, I think it was a policy mistake that the Fed pivoted to rate cuts late last year.
Patient.
I think when they talk about the balance of risks, they really weren't apparent when the Fed pivoted. Inflation was coming down, but unemployment was running very low. The consumer was strong. Today, they're in a different spot where we are seeing signs of weakness really feed through to the real economy, and inflation is picking up. I think the Fed has a much tougher job today.
And to Jeff's point, Ann, you were saying that there's going to be questions here potentially raised in that press conference about whether, in fact, the Fed missed this and why they missed it.
Yeah, and to come back to the Fed has consistently said they're going to be data-driven. So if we're looking for consistency, that's where it's been. What there hasn't been yet, I think, is either introspection or external.
The idea of their concern around inflation. But I think one thing we're also should be talking about is part of this announcement has been a tapering of QT, and I think that's also a potential policy mistake, right? The Fed had two levers to prop up the economy in signs of weakness. One, very low rates, and they're reversing those. But the second was QE.
I'm waiting.
Reversing that with quantitative tightening. And here we sit with high and problematic inflation, yet the Fed is really providing a little bit of stimulus in the form of that tapering to QT. So we'll see where that has to head. That would be my primary question. Why now?
You agree, Anne?
I do, and I think a little bit of this too is the Fed's job is not to monitor the markets or to prop up the equity markets. Like there has been this big question mark though, has the tail been wagging the dog? So I think, Jeff, that's a great point. I think some explanation is going to be needed.
Jeff, what is the bottom line coming out of the House view at Thornburg about when the first cut comes?
Well, I think the Fed has already told us they are in rate cutting mode, and maybe they'll reverse that. They probably should, but I don't think they're going to go quite that far. So I think the bias is still to cut, and I think they are going to have to be data dependent. I do think that we are seeing slowing in underlying economy, and that will feed through a re-slowing of inflation. But the Fed has created a very sticky inflation on the back of the focus on unemployment and bringing up the low-wage income earners.
When you say cut, Jeff, I mean, is it September, December? Does it matter when the first cut comes?
I don't know that it really matters, but if I have to put myself down, I think it comes after the election cycle, and I would agree it's apolitical in nature.
I was waiting for it to break the 84, so I can go short, but did not do that.
Introspection that's needed. I mean,
I'm waiting.
Expecting that to happen before a rate cut, right? So you sort of let the cycle pass. But at the same time, I mean, you're talking about inflation potentially reaccelerating, the concerns about Fed missing transitory inflation, whether that was in fact a miss as well.
Scary.
Does that point to a larger issue within the Fed?
Move so fast.
What questions does that raise?
My 10 points
as we
kind of
look to when that
tight.
first cut comes?
I mean, in terms of conviction and the ability.
Just move so
Exactly, and
fast.
credibility.
Well, yeah, look, I think in terms of credibility, I think
Man,
the
I get so
Fed
nervous.
has done a pretty good job of
Kind of
restoring its
embarrassed in here.
credibility.
Let me take a bathroom break. 1 second, be back. Oh, Jesus.
Such difficult circumstances to pass through what was really happening. If you went back, Akiko, to December of 2023, I was in the camp of I thought we were just as likely to get a rate hike at the beginning of this year as we were to go the other direction. And I think there's an issue here around, let's look at the mandate of the Fed. 2% inflation target for maximum possible employment under those circumstances. I'm still slightly perplexed as to why there could be a rate cut. Because absent a really tough recession that gets us well below that 2% target or well below full employment, I don't understand what the rate cut catalyst is right now. Very simplistically.
So is that no move at all, or a potential hike going back to where you stood in December?
I think no move at all, because I think at this point the Fed has been signaling so strongly that a rate cut is on the come. But I'm in the camp of no move at all. I'd be more surprised to see a rate cut before the end of this year than I would to see nothing happening.
This issue, Jeff, of credibility is really interesting, just because it is true earlier this year, I think you could say most Fed officials were just sort of upbeat about that inflation trajectory. They got it wrong. I don't want to say they got it as wrong as, like, transitory in 2021, but it was a miss. I mean, I'm just curious to get your take on the credibility of the central bank.
Okay, I'm
Go
back.
back to that mandate, and I want to introduce kind of another concept, which is the Fed actually has a third mandate given to them by Congress, right? It's price stability, it's maximum employment, but it's also moderate long-term interest rates. And one of the things I've talked about is that third mandate gives them flexibility, which is different in a world where the Fed is trying to pull down inflation versus one that we're emerging from, where they're trying to push up inflation. I think that third mandate is social stability today, and it's compressing the wage gap. And so again, it creates a sticky form of inflation, but it creates the exact challenge that we have today. And it's a tough one for the Fed to deal with. So I think they've done an okay job, but a lot more conversation, a lot more questions coming up in the presser to see where they stand today.
Jeff, you said you expect if the cut's going to come, it'll be after the election. Is that just a conscious decision as you see it? You think the economic data will necessitate that? Why the timing as you see it?
It's because the bite of higher rates is working today. The consumer is slowing, and it just needs more time. So it has nothing to do with politics. But I agree with something you said earlier. I think what the Fed needs to see is inflation to be durably below 2%, which is a real slowdown from where we are today. And I think that just takes some time, but it is coming.
What do you think, Ann, gets us to the Fed's target?
Doesn't look good.
I think we need to see
I'm wrong with this
sustained
trade.
low levels of commodity prices. I think that's really important. We're seeing a slowdown in China. We're seeing that from earnings from Starbucks, from Apple. So I think that is going to be a piece that's helpful. And I think we do need to see the level of wage inflation to continue to do what it's doing, which is coming down.
Give me a
We
push.
had the JOLTS report out today. the number of job openings, lowest in 3 years, but still incredibly high relative to broader history. And to go back to your point, Jeff,
Yeah, I'm going with that, Trey.
this
I'm
idea
wrong.
of rates, being moderate. If you go back in history, even where rates are today, they are pretty low by historical standards, and we forget that, right? We really need to look at this through the lens of the broader history to understand. I actually think we're in a fairly
I was
moderate
wrong with
environment
that,
right now,
Trey.
as crazy as that sounds.
Yeah, it's that too many years.
Patient.
Near zero.
Right, I
We
agree.
sort of got used to that, right?
Yeah, I agree.
And so I guess the question that Josh asked Jeff there, what is the one question that you have for the Fed chair today?
I think it would be, what level do you want to see the labor market hit? That's the metric. Forget what's going on in inflation. What do you need to see happening in the labor market to make a move?
Would that be the same question for you, Jeff?
I would ask Powell directly, and I would love to hear his answer, how the Fed thinks about that third mandate. Because again, it is given to them by Congress, but they never talk about it.
Yep. Jeff, Ann, thank you so much. That was great. Appreciate it. Coming up,
I was
Federal
wrong.
Reserve has once again left interest rates unchanged and reiterate
Take a
plans to
step back.
hold rates steady. On the other side, we're joined by former Fed president to break down the moves, discuss when that first cut, if any, is going to come. Stay tuned. More market domination coming right up.
No revenge trading. I was wrong. I really want to take this trade.
We are moments away from Fed Chair Jerome Powell's press conference. Here to talk more about today's decision and what to expect from Powell. We are bringing in former Minneapolis Fed President Gary Stern. Gary, it is great to see you.
Good to be here.
So maybe, Gary, listen, let's just start high level. Your reaction, your response.
Well, from the statement, I don't think there was any surprise in that statement whatsoever, and I'm sure that was the Fed's intention. They're not up to surprises these days for the most part, and I think it's what people in the markets expected. So you know, it achieved, as far as I'm concerned, it achieved what it intended to.
So much of this is obviously about
Papa
the
Powell going to
expectations
speak in
game,
a
you'd imagine the
couple
Fed, there's going to be
minutes.
a question today about why it was messaged in a way where the market sort of set the expectation for a potential rate cut come June. Was the Fed too optimistic, you think, about the speed of deceleration for inflation?
Well, with the benefit of hindsight, certainly, but I think more fundamentally, I think the Fed probably gave itself too much credit for the deceleration that was occurring, in the sense that some of the, and they attributed it to restrictive policy, whereas some of that deceleration was continued unwinding of all the disruption and supply side constraints and so forth from COVID and its aftermath, and that had longer tail than I think the Fed expected. That's nothing to get all that worked up about. I mean, COVID is a once in a 100-year event, but and so there was no prior experience with something like that. But I think the Fed perhaps was overly optimistic about what policy had achieved, as opposed to what was just naturally occurring in the economy.
And what Gary gets us, I guess, back to the Fed's target then? And how long before we do get back there?
Well, that's a very tough question, and in fact, that's a question I'd ask Chairman Powell if I had a chance. I think it's going to take some time, because I think there's a lot of inertia in the inflation process, and I think we're seeing some of that now. And so I think it's going to take some time for inflation to return to 2%. I think it will do so because expectations, inflation expectations, are very well anchored to that 2% or so number. Not just because the Fed has been religious about maintaining it, but most central banks around the world have as well. Their commitment to low inflation seems to be definitive. And as a consequence of that, ultimately that anchor will prevail. But I think it's going to take time.
When you say that there's a lot of inertia, what do you mean specifically?
Well, what I mean by that statement is, if you look at the historical behavior of inflation, the best way to forecast inflation a year from now is to ask yourself, what has it been in the previous 12 months? And so if you say it's been, say, 3%, just to pick a round number, if I had to make a forecast for the next 12 months, I'd say 3%. Now, that's not going to be a perfect forecast, but it's a forecast that works quite well following the financial crisis. It worked quite well prior to the financial crisis. There's a lot of evidence. What I'm trying to get to is there's a lot of evidence in terms of that kind of forecast. Why is there inertia in the inflation process? Well, I think it boils down to the fact that we have a big, complex, sophisticated economy, and with millions of decision makers. And you just don't expect
1.5 minutes.
that people's behavior,
or 2 minutes before he speaks,
is going to change on a dime, or change just because the Federal Reserve or some other policymaker says, I think X is going to happen rather than Y.
I mean, let's pick up on that complexity, though, because one of the things we were talking about on set earlier, that
the
question I keep going back to is how
time.
much of this last mile is in the Fed's control. There's certainly a lot of other factors that are at play. You've got a war going on.
That's a very good point.
And so how much of, what does the Fed need to do to maybe guard against some of those risks that are not necessarily in the central bank's control that could accelerate inflation further?
Well, I think there's a two-part answer. The first part is patience. The Fed shouldn't kid itself that just because it'd like to get to 2%, it's going to get there smoothly. And I don't think they do, by the way. And you're quite right that something could come along and disrupt it. On the other hand, something could come along and accelerate achievement of the goal too, although I don't think I can identify anything at the moment. So I think patience is important. And I think beyond that, I mean, the Fed, if I were still at the Fed, I'd be asking myself, have we done enough, or do we have to do more to make sure we achieve our inflation target? Right now, I would, as I said, be patient. But I don't think you can take off the table the possibility that, despite all the progress that's been made on the inflation front, and there has been significant progress, no doubt, it may require further action.
Gary, you know, we are in an election year. You wouldn't be surprised if at the presser Powell gets asked again about that, and he would probably repeat, listen, we're independent. But they have to be thinking about it, don't they, Gary?
You know, I've thought a lot about that question, and the more I think about it, the more I think that it's actually quite simple. What the Fed has to do is the right thing, whatever it may be.
Be patient.
If you do the right thing and you have a
patient.
compelling explanation for why it's the right thing, you don't have to worry about the politics. And that's the way to proceed. And I'm sure I'm not the only person who has thought about that. I'm sure plenty of people in the Federal Reserve have thought about that. And I would be very surprised if they hadn't reached the same conclusion. If you do the right thing, your defense is easy, and you don't have to worry about the politics.
So you don't think the Fed's going to hesitate to move?
No.
I try to take the tray.
I do not. I do not. I would be
Didn't go
very
my way.
surprised if that concern arose
Okay,
at all.
here we
That doesn't
go.
mean the Fed doesn't. I
You're
mean, they
gonna
know it's the
speak
election season. It's not that.
soon.
But if you do the right thing, you
Very
don't have
soon.
to dream up complicated explanations or we're
Take a
a little
step
concerned
back.
about this and a little more concerned about that. Don't get into that game.
What did you think, Gary? Just stick with this question if you have such inside knowledge. I have
Man,
that-
very
that
tempting
journal
to get
headline we
in
talked about earlier,
long.
Suggesting Trump
Very
allies
tempted
maybe
to keep
dragged
breaking
rules
sort
to
of
erode the Fed's
resistance
independence. Give me your take.
level.
Well, two things. First of all, I think it's a bad idea. And I think if it's not broken, don't fix it. I think the Federal Reserve, on average,
Here
has
it comes.
served the country well, and you ought to leave it alone. Having said that, you know,
Okay.
the politics of something like that, I don't think they can unilaterally achieve that much.
Okay, Gary, thank you so much for your time today. Let's head out to the Federal Reserve, where Fed Chair Jay Powell is taking the podium right now.
He hasn't opened his mouth, and it dropped like crazy.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people.
40
The economy
points.
has made
What
considerable
the?
progress toward
You
our
got
dual
caught that.
mandate
Oh, you got
objectives.
caught that, huh?
Inflation has
Oh.
eased substantially over the past year, while the labor market has remained strong. And that's very good news.
Oh, that would be
But
awesome.
inflation is
Look
still
at
too
that.
high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are
Wow.
fully committed to returning
don't like what
inflation to our
he's
2%
saying.
goal.
Do not like that
Restoring
at all.
price stability is essential to achieve a
Man.
sustainably strong labor market that benefits all. Today, the FOMC decided
I
to
don't
leave
like
our
it, the
policy
way he
interest
talks.
rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace.
Wow.
Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks.
And of course, we knew that.
We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%.
I don't like that.
So far this year, the data have not given us that.
Don't love what he's saying.
In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Man, a trade like this, man, we must have like a 100-point stop loss or something.
And price stability goals.
Man.
Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that the data will have to answer.
So as a follow-up, if inflation continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be the acceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts. And those would be, two of those paths would be that we do gain greater confidence, as we've said, if that inflation is moving sustainably down to 2%. And another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
750.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply-side distortions and demand-side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply-side issues that they're facing. And also, even when the supply-side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or a strong labor market in and of itself would automatically create problems on inflation, because, of course, it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. You know, what we said is that we need to be more confident, and we've said, my colleagues and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings
in place. 10 points.
So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Yeah, Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing, we have put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view, I think, that in fact we didn't gain confidence and that it's going to take longer to get that confidence. But confidence, I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we thought. And there are stories behind how that happened, and I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in-housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
No, I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other
I'm watching right now, just trying to be patient. I'm not trying to get so emotional attached to
two
the
questions.
trade.
First, simple one. Given the run of data since March, has the
Been
probability
pushing
in your
for
mind
the
of no
last
cuts this year increased or stayed the same? That's the first question.
Almost an hour to keep
Second
going
question. Chair
Not
Powell,
even,
you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like.
It's hard to
and
short,
lawyers,
to go against the trend
accountants, all kinds
right
of
now,
highly
but
qualified
we'll
people
see.
who couldn't get jobs.
if it break this level right here, is it break 74, 75?
With
It's
inflation
not a
here.
bad idea to go
We
short.
have
But,
strong productivity growth.
but,
That's helping wages go up. We have good
but
employment.
look, it's
And
keep
so
going.
it seems to me there's a lot of hysteria
Right now we have
about
resistance
inflation.
level
I
at
agree. It's, nobody likes it, but
725.
But is there
If
an
it break
argument
through
for
this,
being
man, I think
patient
I'm going to
and
go
working
long.
with the economic cycle
Break
to
through
get it
the
down over time? Thank you.
So
Is
on
this
your first question, I don't have
25?
a probability estimate for you, but all I
Look
can
like
say
that. We
is
have a resistance level
that,
at that.
you know, we've said
Break
we,
through that,
we
then
didn't think it'd be
I
appropriate
guess
to
we
cut
have
until
no
we were
choice
more
but go
confident,
long. I have no choice
that
but go
inflation was
long.
moving sustainably on at 2%. We didn't
Trying to
get
cash
our confidence
15,
in that.
20
It didn't
points or
increase in
more.
the first quarter, and in fact,
So
what really
let's see
happened
if
was we came to the view that it
725
will
hold.
take longer to get that confidence, and I think there
Yep,
are. I
725.
think it's the economy
Well,
has
to
been
go through that.
very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's
I'm
really going to
watching.
depend on the data. In terms of the employment mandate, to your point,
Go.
if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other,
Doesn't wanna
then you
go.
focus on that one. It actually, it's the time to get back
Come
there.
on, push.
Times the, times how far it is from the goal.
Okay.
That is clearly inflation. So our focus was
10 point
very
is
much
super
on
tight.
inflation. And this is
10 point
what
is
we
super
referred
tight.
to in the statement. As inflation has come down now to
I better slow
below
down.
3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal,
Super
now
tight.
comes back in to focus, and so we are focusing on it. And that's how we think about that.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the
Yep,
answer
10 point is
before,
super tight.
the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you
I'm
to
waiting
have
patiently.
a situation where rates are lower at the end of the year than they are right now.
Oh, what?
It'd be good if you could
Okay,
just
stop.
confirm
No,
whether
no,
or
no,
not
I'm
that's
not
a
on the
correct
tray.
reading.
10 point is super.
And the key print has
Okay.
led to some to start mentioning
Okay,
the term
I'm
stagflation with respect
not
to
on
the
the tray.
US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah.
Okay, stop
I'm
it.
not dealing really in likelihoods.
On
I
this
think
account,
there
I'm
are paths
still
that
up
the economy can
1,000,
take that would
1,100,
involve cuts, and there are
1,200,
paths that wouldn't.
51,
And
160.
I don't have great confidence in
I'm
which of
still
those
good
paths.
with
I
this
think
account,
I would
but
say my personal
cannot do
forecast
this.
is that we will begin to see further progress on
Super
inflation
tight.
this year.
Nah.
I don't know that
Patient,
it will be enough
patient.
sufficient. I don't know that it won't. I think we're going to have to let the data
And
lead us on that. In terms of your question, your second question was stagflation. I guess I would
Now
say
it's moving.
I was around for stagflation, and it
I'll be
was
super patient.
10%.
10 point is
10%
super tight, but
unemployment.
that
It was
is my
high
plan.
single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really
I'm
understand
still
where
okay
that's
with this
coming
account.
from.
We'll see.
And in addition, I would
Have
say
to slow down.
most forecasters, including our forecasting, was that that last year's level of growth was very high, 3.4% in I guess the fourth quarter, and probably not going to be sustained, and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag or the inflation actually.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up.
Yeah,
And
let's
of course,
go
he's
through that too.
Mr. Potential Growth, our star. Do you share that
750.
view, and would that imply that maybe policy isn't tight enough?
I think I would take that question this way. We saw a year of very high productivity growth in 2023, and we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. I mean, the question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy. That's not about productivity. It was about having more labor, frankly, both through in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output. But you've also got, so you've got more supply, but those people also come in, they work, they have jobs, they spend. So you've also got demand.
Go, give me a push.
It may be,
oh, no.
It may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary.
10 points doesn't work for me. Let us take a step back.
You said earlier that
at
this point you're not really considering
10 point doesn't work for me.
If growth is
look
higher,
at that, I missed out on that trade.
Rate increases. Does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
My balance on this account right now is at 51,000.
Stance is in a good place and is appropriate to the current situation.
Yeah.
We believe it's restrictive. And our evidence for that I went over earlier. You see
10 point doesn't work.
You see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years, and that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2%.
Yeah, I know, man. PT
so
is tough. 10 point doesn't work. It moves so fast. Look at. And I don't want to risk like 30 points or something like that.
Of course, we're not satisfied.
Crazy, huh?
Inflation. 3% can't be in a sentence with satisfied.
Okay, better slow down.
So
I'm still good with this account, but I don't want to messing around.
And we think
$700 already in the red.
Appropriate to do that. So, if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that.
You're right.
So that's where
go to micro and give yourself more room.
So the policy focus has really been on what to do about holding the current level of restriction. That's really part of the policy. That's where the policy discussion was in the meeting.
Yeah, I wanted to follow on the 3%. Is there a time frame of persisting inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria. Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right.
Man,
so that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks.
I have to learn not to formal, not to get emotional involved or get too emotional.
We're on the road where we're serving
and
all the
revenge
American
trade
people
and all that.
and
So
making our decisions based
give
on
up.
the data and how those data affect the outlook.
I have to save my account to fight another day.
And then is there a
I
significant
admit that
difference
I'm
between,
wrong. I
whether
mess
you
up
start
today, but
in, say, September versus
I say to
December?
myself not to go
There's a significant
crazy.
difference between an institution
FOMC,
that
but
takes
I
into account all sorts of
see.
political
Look at that. It's
events
tempting,
and
man.
one that
Tempting for
doesn't.
you to go short.
That's where the significant difference
know.
is. And we just don't do that. I mean, you can go back and read the transcripts for every. This is my
I know.
fourth presidential election.
That's
Read
fine.
all the transcripts.
But as a
and see if
trader, we have
anybody
to learn how to
mentions
adapt.
in any way
Not to give up.
the pending election. It
Not
just
to
isn't
give
part of
up.
our thinking. It's not what we're hired to do. If you
Look at
start
that.
down that road,
I
don't
attempted to
know
go in
how you
to
stop.
go short. Maybe I'll switch this over to
Thank you, Chair
Apex
Powell.
because
Question for
Apex has
labor
that
market. You mentioned a few times that
auto
the labor market is
trailing for you.
normalizing. Certainly today's
So
data suggests
maybe
that
that
things
helps.
are kind of getting back
You
to
know.
pre-pandemic levels. One thing that hasn't normalized is
Yeah,
wage
it's
growth, which is
always
still quite a bit
tomorrow,
stronger
but
than
look
before
at
the
that
pandemic.
surge.
I wonder if you can share your analysis of why that's
Oh
happening.
man,
Is it
normally
a lagging
I would
indicator or
short
something
right
else
here,
going on?
bricks that
So I think if you go
750.
back to where wages peaked,
Looking
wage
at 40
increases
points, man.
peaked a couple 3 years ago. Essentially, all wage
I really
measures
want
have
to
come
lure
down
me in.
substantially.
No, I'm going to
But
trade.
they are not down to where they
No.
were before.
No.
pandemic. They're
I'll wait
still
until tomorrow.
roughly a percentage point higher. And we've seen pretty
Yeah.
consistent progress, but not uniformly. And you'll note the ECI
Yeah,
reading
I
from
didn't set
Tuesday
that up. I better learn how to
was
set that up.
expected to have come down.
Oh, it's okay.
Essentially, it was flat year over year.
I accept my defeat today.
Roughly. So, yeah, I mean, it's
No,
that part of it
no.
is bumpy. And again, we don't
Not going to
target wage
trade.
increases, but
I'm still up $1,000 on this
in the long
account.
run, if you have
But
if you
no.
have, wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
With Topstep, $1,000. But I usually stop trading at 500, but I overdid it, $700. But Topstep will auto stop you out for 1,000 without 1,000. But I have to learn how to control myself, man. Done, stop. Not going to trade. That's it, guys. I mean, I'll have to come back tomorrow, Yeah, I have to admit that I was wrong on three trades. I shouldn't trade that many.
People
But
in the lower
I
income
better stop
brackets
right now.
is inflation. If you're a person who's living paycheck
I
to
better
paycheck,
stop. No, this is
and
not. This
suddenly
is not.
all the things you
Yeah.
buy, the fundamentals of life go up in
Better
price.
stop. I don't want to
you
blow
are in
up this
trouble right
account.
away. And so with
But
those
again,
people
I'm
in mind
still
in particular,
up
what we're doing is we're using our tools to bring down
957.
inflation.
Let's say
It will take
$1,000
some
on this
time, but
account.
we will
but,
succeed, and we
that's
will
fine.
bring inflation back down to
Stop.
2%, and then people won't have to worry about it again. That's what we're doing, and we know
Yeah,
that
I
it's
up
painful and
$300
inconvenient,
something dollars today,
the dividends will
minus
be
that.
paid
So
and
basically,
will-
I'm
will
down
be very large,
$1,000
and
technically.
everyone will share in those dividends.
I was
And
up
we've made quite a lot of progress if you think
$350,
about it.
something like that.
I think core.
Now
I
I'm
think,
in the
headline
red for
core PCE
692, almost 1,000. No,
at
I better stop.
5.8. Now it's at anyway. Headline peaked at
I better
7.1.
stop.
Now it's at 2.7. Don't want to
I
get that
mean it.
wrong.
I better
No, you
stop.
don't. Quick
No more.
follow-up. Are current interest rates really doing
It's
that
not a
much, though,
casino,
to fight
man. You
inflation
cannot
right now for those
revenge trade and all that crap, man.
Yes, I mean,
Stop.
I
I'll
think
come
that
back strong
restrictive
tomorrow.
monetary policy is
Not to blow up any
doing what
other
it's
account.
supposed to do, and but it's also in this case
Stop.
unusually working alongside and with
Fine.
the healing of the supply side. This that was different this time was that a big part of the source of the inflation
Yep.
and the reason
My
why
go- I hope you guys do the same thing too.
is that we had this
We
supply
have
side kind of collapse
full
with
control of our
shortages
account,
and bottlenecks and all
and
that
we
kind of
must
thing. And
have
so
full control of
this
our
was to do with
emotions
the
and our
shutting down and
actions.
reopening of the economy
No.
and other things that
Stop.
that really raised demand. So many factors did
That's
that.
fine.
So I think now you see those
And
two
you know
things
what, to be
working
honest
together.
with you,
The
I don't want to
reversal
listen
of
to
those
this guy
supply and
anymore.
demand
What the hell he's
distortions
saying?
from the
Stop, man. I'm listening to my music. Stop it. The guy doesn't make any sense, but that's fine. Yep, Serge, you are right. We have to take control of our emotions, man. You know, this time like this, a month ago or 2 weeks ago, I just keep click, 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 you know, revenge trade. And then when I blew up this account, I'll move to a different account. After this, no more, man. We'll wait until tomorrow, man. Yep. Listen to my music, man. Relax. Man, I don't want to listen to this guy anymore. Nonsense. Nonsensical. Anyway. I get emotion there, but that's fine. We'll stop. I'll stop. Yep, we have to learn how to stop. Even though I'm trading with my combines with Topstep, honestly, it cost me $25 for this account. But it's not about $25, man. Honestly, it's not about $25. Every time I make a trade, I treat it like $100. Like if I lost $600 or $700 on this, I just assume that I lost $600, not the account for $25. You know what I'm trying to say? So I have to treat it like that way, to take control of my emotions. Because knowing that if I'm doing the right thing right now, in the future, once I get funded and all that, I'll be very successful. I hope you guys understand what I'm trying to say. Yeah. I have to take control of my emotions. Trust me, a week ago, if this happened, I'd just click, 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 you know, in the back of my mind, oh yeah, it's only $40, $25 account. What do you care? That's the wrong mentality of learning how to trade or to be successful in this business. I'm keep running and going again. Stop. But you guys understand what I'm trying to say. Anyway, I hope everybody doing okay. I hope you guys not to blow up your account. Yeah, thank you, Serge. Thank you so much, man. It's fine. You know what? Listen to him. I don't know what the heck he's saying, man. Talking nonsense, man. Back and forth. Stop. I would rather listen to my music, relax. Yep, try not to blow up our account, man. hope you guys didn't trade like me. I hope you guys did better than I did. I mess up. Hope you guys do better. Yeah, but honestly, I wasn't upset or anything. Yeah. Lesson learned. Lesson learned. We learn new every day, new stuff, new way to trade every day. So you stopped to search? Yeah. Awesome. You're pretty good. You control emotions and everything. That's awesome. Yeah. We'll come back tomorrow, right? We'll come back tomorrow. Yeah, that's awesome, man. This is for you, my friend. Awesome. Yep. Awesome. Yeah, on this account, I still need $2,000 more to pass. $2,000 to pass this account. That's fine. We'll come back tomorrow. Hey, Chino. Don't look at my P&L, man. Don't look at my P&L, man. And don't give me a hard time. Don't judge me. I made mistake. What's up, Gino? I know. Yeah. That's okay. I stopped. But this time I control myself, man. I just like, that's a big improvement. I usually go in and trade some more and blow up my account. And when that blow up, and then I move to a different account. But I really control myself. I was able to control myself. I mean, I'm proud of myself in that respect. Yeah. But that's fine. We'll live another day to fight, right? I don't want to watch it, man. I know I made a mistake. Yeah, but you're right. I should. I should, my friend. Yep. Hey, man, you better come back tomorrow and trade with us, man. You know. Yeah, but on the bright side, this account is at almost 5,100, so I need $2,000 to pass. So I have to look at that to make me feel good. Yeah, so it's not that bad. This is not that bad, but at least I know that I was able to control my emotions, and I was able to put a stop to this. No more trading. Yeah, yeah. To be honest with you, Chino, it's not too much, man. You trace, yeah, man. I don't know how you handle that, man. That's a lot of trading. Yeah, just save your energy and come back and trade with me, man. 8 o'clock. Come on. Yeah. Awesome. Awesome, my friend. Yeah. My wife to keep texting me. She make fun of my trades. Stop. I better tell her to stop. She's texting me, man. Like, why you take that trade? She's making fun of me. Stop it. The wife's supposed to support you, right? She text me, it's okay, baby. And then, what did you take that trade for? Like, she slapped you in the face and trying to kiss you at the same time. Does your wife do something like that to you guys? Slap on your face and kiss you? What are you supposed to think? My wife's kind of funny, man. Oh, okay, Gina. Yeah, but you know what I'm saying. She slapped like this so hard. I said, "Honey, let me give you a kiss." I mean, what are you supposed to think? Crazy, but yeah, that's fine. Yeah, Chino. Now it's dropping like crazy, but that's okay. With Topstep, they have the feature that for us to stop ourselves out, like no more trading for the day. I've been looking for that. When the time comes, I better click on that to stop myself out, like lock me out. There's somewhere. Have to look. Yeah. So that we don't go crazy, like continue trading. I really like that features. I better look for it later on. Anyway. But yeah, awesome, Gino. Thank you so much, man, for promise to come and trade with us. Yeah. Yep, we have 30 more minutes to go. I just want to sit here and to entertain you guys. And very tempting to take the trade, Chino. Very tempting, man. To go short. Let do 10 contract. And then close my eyes and shut off the computer or something. Oh. Yeah, thank you, Serge. Are you done for today, Serge? Okay, man. Hopefully I'll see you tomorrow, okay? Come back and trade with us. And don't be shy to share your P&L so that I can do this for you. Yeah. Or I can do this for you. And I hope that I don't want to do this. Okay, stop. But yeah, would be awesome that you can come back and trade tomorrow with us. But you have a good night, man. Yeah, Mo. Don't get into that, man. I made a mistake, but I stopped trading. I stopped. Yeah, I'm glad that you went out to lunch. Didn't take the trade, or any trade for that matter. I think right now it's much easier to trade than half an hour ago. Kind of slowing down, but no, but I'm not going to take any more trade. That's it for me. But I'm just saying, now it's a lot more calm than earlier. Went all the way down to 85. Only 5 minutes from 90 to 50. 60 points. 60 points within 5 minutes. Look at this candle right here. Yeah, I don't know if Gina heard my new songs. I hope that I can let me play this song. I got the new song, Gino. Let me stop that. Stop that. Where are my new songs? Yeah, this is my new songs. Okay. Lift me up. Lift me up. I'm suffering from trading depressions. Lift me up. Yeah, this is my new songs. One of my new songs. Yeah. Trying to entertain you guys. Hope you guys like the songs. Hope you guys like the song. Yeah, she sings in Mandarin. Yeah. I like this song. Lift me up. Let's mix some more trays. Lift me up. That's right. I like that. I love this song. That's right. Go. That's right. $25 more minutes to go. One more time to kill the time. One more time, I promise. This is the last time to play the songs. Yeah, if you guys like the songs. Let's put my trading for today aside. But if you like the song, click on that like. Just for the song. Yeah. Okay, as promised, I'm done with that song for now. Okay, hope you guys enjoyed that song. I enjoyed it. And now I'm dropping like crazy. $100 from here. I was shorting right here, but came back and took me out. I was shorting up here. 100 points. Damn it. Yeah, I was shorting at this level up here. 724. Now 603. That's fine. We'll do it tomorrow. Yes, sir. Mr. Moo. Yes. We'll do it again tomorrow. That's fine. Right. Look at that 100 points. Let's keep dropping too. Yeah, I was too early. So my lesson is this. Whenever the FOMC meeting going on, go wait until the Fed almost done with his speaking. Say trade at 12:30 or so, right, my time. So yeah, so I better write that down. Just wait. Yeah, shouldn't trade while he's speaking. At the minimum, wait until he almost done with his speaking, then trade. Yeah, that's where we catch this move, right? So that's my lesson for today. Wait. Okay. I'm going to write that down. So when the time comes, I'll wait. Say that 12:30 my time, 3:30 New York. Right? 3:30 start to trade, but not at 12, meaning not at 3 p.m. or 3:15. Wait until the 3:30 to trade. Yep, that's my lesson. Yep. Man, we learn new lesson every day. Yep, I have to write that down. Do not trade FOMC until 3:30. Yeah, so we can catch this move right here, 100 points move. That's right. Yep, thank you for your comment, Moo. You lift me up. You ensure me it's going to be okay. Live, and fight another day. Yeah, if you guys came late to my live stream, I stopped trading. I made 3 bad trades, and I was up more than $300. I gave them back plus some. So I'm in the red. So I decided to stop. I was too early, shorting too early up here. I was shorting at 726, 25, something like that up here at this level, and I was too early, maybe 20, 30 points early. But look at from that, it dropped more than 100 points from where I was shorting at. So I was way early. So like I said earlier, my lesson was to wait until the Fed almost done speaking to pull the to start trading, not trading while he's speaking. Yeah, that was my mistake. Yeah, so I hope that we all can learn from that. Yeah, to wait. I said to myself not to make any trade, but I was a little bit early. Yeah, I was so disciplined that I didn't trade for the first 10 minutes or so while he's speaking, but I wasn't disciplined enough to wait until he's almost done speaking, or stop speaking before I take the trade. But I did, so that was the mistake that I made. Yeah, and you all know that it doesn't take much for us to give back $700 or $600, something like that, with NQ, trading NQ with 10-point stop loss, or for 20-point stop loss for that matter. So I accept that, so I stopped trading. So I guess I'll have another 15 minutes to sit here to hopefully that I can entertain you guys while we're waiting for the market to close. But I hope to see you guys again tomorrow. So I will do better tomorrow for sure. Yeah. some of you might come and say, hey, this guy lose money, don't want to hear that, but yeah, I understand that. I understand that you come to a channel, to a YouTube channel, especially with trading, you expect that person to make 1,000, 2,000, or 3,000 to show you guys, but this is the reality of my trading. Yeah. I hope you guys didn't disappointed, but yeah. It is what it is. I cannot hide that. Yeah, it is what it is, my friend. I don't want to switch to a different account to show that I'm not making any money, I'm not losing any money, but I want to be transparent as much as I can, right? So hopefully we all can learn from my mistake, from my this undiscipline. So if you're here for that, then yeah. But you're here to expect me to see I make 1,000 every day or 2,000 every day or something like that. I don't know, but yeah. But again, I can trade a fake account or something, but I don't want to do that. I want to grow, and I want to be as, like I said, transparent as much as I can. But for me, it's not today. But again, I learned. I will not repeat this kind of mistake again. Like I said, I try my best to be better every day. At the minimum, 1% better every day, right? So, yep. We have 13 more minutes to go. So. Yep, this is reality of trading. Hey, welcome. Sehin, right? Yeah, Sehin. Sorry, man, if I... Hey, welcome, my friend. Welcome. Yeah, thank you for that comment, my friend. I kind of disappointed, but yeah, I thank you so much for that comment. I appreciate you. But yeah, we can come back tomorrow and trade, right? As long as we still have our account to trade. Yeah. But yeah, I appreciate that. And welcome. Thank you so much for subscribing. Thank you so much, Sahin. Welcome. Hopefully I will see you tomorrow again. Thank you. Yeah, but to be honest with you guys, I was able to control myself not to get carried away. Yeah, I learned how to say stop, and I mean stop. Yeah, and you know that with trading futures, it moves so fast, and sometimes you go, I have got to get in to get all my money back. But I was able to go, no more, stop. So that's a plus. Yeah, that's right. Yeah, you're right. Micro, yeah. If I want to trade. Yeah, that's nothing. Yeah, I hear you. Yeah, very dangerous, huh? I hear you. 100%. Yeah, maybe next time I'll try that. Yeah, we can do micro and with five contracts, like half of the mini size. That would so that I can put my stop loss at 20 instead of 10 point stop loss. I can go 20 points. Maybe I do a 5 mini. Yeah, that's half of the. Oh no, 5 micro instead of, yeah, that's half of the mini. Yeah, not a bad idea, my friend. Yeah. Nine more minutes to go. Look like the VWAP hold. Nope, it's not going to hold. Yeah, but with this combine from Topstep, I'm at 51,000, so I'm $2,000 away from passing this account. So yeah, that look like they're taking profit right now. Wow, I hope you guys caught that move. Wow, you're right, Shane. Man, it dropped like a rock. 550, no, 560. 60 points, just like a rock. Okay, 5 more minutes to go. Yeah, I hope you guys caught this move. Well, I did not, so. More than 750. 200 points move. at that. Five, 450. Is that 300 points? Is it dropping? 457. Whoa. $300 points. Oh wow. 300 points from the top. Whoa. Yeah. 300 points. And I was shorting up here. I'm a little bit too early. I was shorting up here. 725, 720 up here. 460. More than 300 points. Whoa. Anyway, I hope you guys doing good. And I hope you guys doing good so you can come back tomorrow and trade. Anyway, guys, I thank you so much for stopping by. Thank you so much, guys. Honestly, thank you so much. Even though I'm not doing good, but you guys came and supported me and all that. And hopefully we all can support each other, right? Anyway, thank you so much. Once again, thank you. And I'll see you tomorrow at 8. Yep, tomorrow at 8. Pacific Standard Time. Tomorrow at 8. Thank you so much. We'll see you tomorrow.